Part 4, Chapter 10, Research and Development under IGAP and the International Standard, and Software Development. Now, research includes all planned search or critical investigation to discover new knowledge that helps develop a new product or service or a new process or technique or improving an existing product or process. Development is the translation of research findings into a plan or design for a new product or process or improving existing product or process, whether intended for sale or use. Now, we break these out separately because they're treated differently between IGAP and IGAP. So, IGAP, both research and development costs are expensed when incurred. Legal and filing fees are capitalized as intangible assets. Under the International Standard, only research costs are expensed. Both the development costs incurred after feasibility is established and the legal and filing fees are capitalized as intangible assets. Now, what about if we buy something for an R&D project? Well, if the assets purchased for a single R&D project, we have to expense it as part of R&D. However, if we buy an asset and it's going to be on multiple projects, then we can capitalize it, depreciate, or amortize it, and it's including as part of R&D expenses. Only in the period the assets are used for the R&D activities. Now, IGAP versus the International Standard. Let me fix that. Okay, I've had to fix that top part. It's IGAP versus the International Standard for R&D. Now, under IGAP, again, research and development are put together and they're treated as not treated any differently. They're expensed in the period. Now, under the International Standard, it's different. Research expenditures are expensed. However, developmental expenditures that meet specified criteria are capitalized. And usually, if it has reached technological feasibility, you can capitalize it. Now, under IGAP and IGAP, any direct costs to secure a patent, such as legal and filing fees, can be capitalized. Let's take a look at an example. All right, my company incurred the following research and development costs. We have salaries and wages, materials for basic research, other costs for basic research, development costs, legal and filing fees for the patent, and equipment to use on multiple products. So, here's something we do know. We know that the first three items, we would probably just expense those under IGAP and the International Standard. However, the development costs would be expensed under IGAP, but under the International Standard, we would capitalize those. So, and the legal and filing fees also would be capitalized. And since the equipment's used for multiple projects, we'd be able to depreciate that. So again, under IGAP, these would be research costs, and we would expense them, and we'd also expense the development costs. And we would be able to expense the depreciation to give you total R&D expense. And then we would capitalize the filing and legal fees and the equipment. Now, under the International Standard, we would only expense the research costs and the depreciation. That's it. The development and legal and filing fees would be intangible assets under the International Standard. Now let's take a look at software development. Software development are costs incurred up to technological feasibility are expensed. From technological feasibility to the release to the public, costs are capitalized as an intangible asset, and then they're allocated based on two different methods. One is percentage of revenue method. The current revenue divided by the total revenue, that tells you how much of the costs we're going to amortize each period. And the straight line method, we just take the costs and divide by the useful life, and that gives you your amortization expense. So let's take a look at an example. On September 30th, Mike Software began developing a software program to shield personal computers from malware and spyware. Technological feasibility was established in February 28, 2021, and the program was available for release on April 2021. The development costs were incurred as follows. Mike Software expects a useful life of 4 years for the software and total revenues of $6 million during that time. During 2021, revenues of $2.4 million was recognized. What are the journals for 2020 and 2021? Well, right from the beginning, we know that for 2020, we're going to go ahead and expense the $2,370,000 because that was before technological feasibility. In 2021, we'd also expense the $970,000 because that also is before technological feasibility. But the cost between March 1st to April 30th, we would be able to capitalize that and then amortize it, depending on what method we use, because it's at the point they have reached technological feasibility. So again, we would expense all of the costs in 2020 because we had not reached technological feasibility. However, in 2021, we would expense the $970,000 because that was before technological feasibility, and we would capitalize the cost incurred after, which is the $570,000. Now we have software development costs. These would be an intangible asset, and now we have to amortize them, and we have two different methods. The first method is based on percentage of revenue. So what we would do is take the $2,000,004 that was earned out of the estimated $6 million, which tells us 40% of the revenue has been realized, times the amount we capitalize, which means we'd be able to expense $228,000 in 2021. Now, if we use the straight line method, what we would do is just take the $570,000 by 4 years. And which method we use? We'd probably use the one that gives us the highest number, which would be the percentage of revenue. So that's how you do that one. Not too bad. And then the last thing we're going to talk about is startup costs. Now, here's the thing to remember, because there's so much uncertainty when an organization starts up. We expense all costs associated with organizing the business. That's the rule. So that ends part 4 for chapter 10.